Whenever you join an insurance company, you've got to be aware of the changes that happen. The most common question is, will my insurance go up after 6 months when I join a new company? A lot of the times, yes. Some of the times, no. Let's go over and show you what the differences are between the two and what causes that rate to increase when you renew every 6 to 12 months. Now, there's a ton of rating factors that can change, and we'll go over a handful of them here in this video. But in most cases, what you're going to notice the most often when your policy renews, you're going to have to read all the paperwork to find it out unless you have an agent. Like, we go through every renewal that we can and we try to go through and see the differences. We usually notate any discounts that have changed and updated and any discounts that have fallen off, because discounts aren't always a permanent thing. A lot of companies do what's called an introductory or a new customer discount. When you're new to a company, they give you anywhere from 10 to 15% off, or they just give you a flat number. I've got one company that just does $15. I always apply it because it's a free $15. You might as well get it as long as I've told you it's going to fall off at renewal, so you'll see a $15 increase at the next premium. That's not the only piece that typically falls off, so that new customer is spread out across 3, sometimes even 5 years. So that 10%, let's just say it's $120 across 12 months, which makes it $10 a month. That $10 a month slowly goes down to 8, then 6, then 4, then 0. And that 120 eventually goes back onto the policy. Now, some companies don't offer you a way to remove it. You almost have to trick the system, but you wouldn't want to pay less anyways. You might as well get the discount in either case. Most of the time, you need to know whether it's an introductory rate or if that company does an intro for new customers. Then you're going to see that renewal go up by that small percentage every year that you continue. Once you've been with them for that time frame and that discount has fallen off, typically 3 years, then you're going to notice that they're not going to go higher. You're not going to see a 5% increase and a 10% increase after that, unless there's a rate change in the company or in the territory that you're directly in. The other part is, I see a lot of the times when you get a discount, there's certain discounts, alumni, being a credit union member, having low mileage, having good grades, away at school students. Those are usually discounts you have to show proof or sign off on. And the companies will normally mail you a letter, even though you chose digital. You said, send me an email, I'll electronically sign it. Some are really good at that. As many millions and billions as these insurance company has, their technology usually is not amazing. There's ways, like there's the things in the background, if you only saw the glitches that the companies have. It's just part of the life of being an insurance agent, is figuring out, oh, well, this went out 5 months in advance and they didn't notice it. So following up on stuff like that is important, but most companies will mail you a letter to sign if you have those discounts. If you have low mileage, you usually have to sign off that, yes, I am claiming I'm only going to drive this many miles. Because you're getting a discount for that, they're going to apply that. Now, it depends on the company. Most companies will give you 45 days to get that back to them. If you don't get it back, they add that price back on, they remove that discount, and then you're going to see that increase right away. That next 3rd month that you go in, the bill is going to be higher. Most of the time it's fixable. In the other scenarios, some companies will give you a multi-policy discount. I'm going to do home and auto together. And then you never do the home, and they don't actually impact you until the renewal. So when that happens, that discount doesn't actually fall off until they rerun all of the information on that next term. Okay, what actually impacts that rate? When they look at you, if they run your verification, if they do what's called a motor vehicle report and a clue report, that's just their way of saying, do you have any tickets? Do you have any new accidents? Let's check your information. If they do that, nothing showed up previously, something could have been missed on the back end that may show up now. If you've had a new accident, a new ticket, those are going to play a factor in that renewal going up. That's the obvious way that your insurance rate's going to go up on that next renewal. A lot of people don't realize that driving experience plays a factor. So every company has a rating, and 99% of the time it goes like this. 16 to 25, highest risk available. You're going to pay the most right then and there. 25 to 50, it goes down over time. So it's throwing 25, you don't see a giant impact. It can, but it doesn't usually. And then when you hit 50 to 55, that's like the sweet spot. That's like the perfect place for an insurance company. As far as claims, responsibility, payments, all of the things are just perfect there. When you get into the 75 and up, it starts to get a little bit riskier as far as claims go. I was talking to somebody recently and they're like, well, why is that? When you hit 80, which they're 83 actually, do you want to stop driving? Well, no. Is it harder to see? Well, yeah, there you go. Like that freedom of having the driving age and having the ability to go where you want, when you want, and that was like a staple for your whole life. You've been driving for 60, 70 years, and being able to lose all that where you can't get behind a wheel of a car, it's a thing, right? It's not something I want to do. I'll probably be the same guy. I'm going to run over 5 cars before I cancel it. But once they get in that accident, now it's like, okay, I'm going to surrender my license, whatever the case is. So there's a lot of risk that tends up to be at the higher age. That's not to say that every company follows that exact path. Again, 99% will, but it's based on their company. So when that company knows that age 17 was a higher risk than age 16 because they had more accidents, then maybe age 16 had a better deal. When you hit 17, your price went up a little bit. Now when you're 18, it went back down. It just depends on the risk profile of the company to who you are. If you moved, the location you live in plays a massive impact on the price. Mainly because if you are in a bad area, go to good area, that's great. If you go the opposite way, then they're gonna raise the rate. That renewal is based on your location. It used to be a zip code, now it's called a territory where there's multiple zip codes and they check the different areas. If there's more claims where you're living now, you're going to have a higher risk of you getting hit by someone that doesn't have insurance, by someone that has less insurance, and then your company has to pay that bill. When they're protecting you based on the coverages that you've picked, they're going to be out of pocket. That's a risk for them. So the location that you live in does play a good impact on what your rate is going to be. Changes to your policy will also affect that next renewal. Some companies, if you have multiple changes, 5, 6, 7, 10, 15, you're calling for billing, you're calling for that, they actually have a rate that they count against you for the number of contacts. That's partially why having that independent agent, if you go local, they usually can work with that same company, you get the same deal, and you can call the agent for advice and questions, and they can call in on your behalf. But half the time, they can answer the question for you. So not having to use or utilize that company and going direct to your agent, you get that advice, all of those things, without having to pay out of pocket. By the way, if you are shopping for new car insurance, I'll put a link in the description below where you can fill out a quote with a local agent that does work with multiple companies. So in our case, we work with over a dozen companies and they can shop it with different options. That's where we're saying that fit might be a better fit with the right company. That's going to determine the rate that you're paying. I'll put that link in the description below. The next piece that you got to think about is that when you do make changes, what changes are you making? If you're changing the mileage, if you're changing the car, if you're changing who's driving, those are going to impact what you're paying. And so that renewal isn't necessarily going up because the renewal has gone up, it's going up because of the changes you've made. Anytime you change a policy, whether you put a car in storage, take a car out of storage, those are going to play factors on what you're going to pay. Those sneaky little discounts that start to creep up is your age, right? We talked about age, but it's experience. Technically, the age that you were licensed could have changed. I see more often than not that insurance companies are checking these, so they'll go back and run your license to when it was first activated, and they'll see that the agent may have lied, and honestly, 9 times out of 10, it's the agent that did it. Or you could have lied and said that I first got licensed at 16, but you really didn't get licensed till you were 18. And having those 2 years less driving experience may have impacted that next renewal. Another sneaky piece is that the vehicles do change. The risk of a car injuring somebody is usually set. Like the crash test dummy, they crash them into the wall, they give them a 5-star rating, a 3-star rating, whatever the safety rating is of that car, and then the car goes out and we drive them. That can change based on the vehicle. Parts availability can change based on the vehicle. So they're called symbols. Each car has a specific symbol. Symbol 10, symbol 30, symbol 25. And all of those numbers or symbols determine the risk factor and the cost factor to replace or repair it. Liability. More people die in this car because the window pops out and stabs them in the neck. I don't know. I'm not the expert in why the cars are breaking down more. But in general, there are risk symbols that constantly change. So I've seen the Equinox. That's a big change car that we've seen over the past couple years to where it was a lower risk symbol. Now it's a higher risk symbol. So the price, you're seeing about 5 to 10% increase on that specific vehicle on the next renewal. Now, all companies are going off of that. So it's dependent on how much the company invests into updating the technology, updating the symbols of the vehicles, updating the location. Again, that's why that profile different fits for different companies. And then hopefully your agent is knowledgeable to say, yeah, they're cheaper now, but honestly, we go with them now, they're just going to do this, this, and that, and we could save money today, or we could stick with the long term and go with this. So you have different options available. The economic impact can play a factor as well, and that's just the inflation. That's just price increase, right? When policy renews, it wasn't a factor of something changed, it was just a factor the price went up. The price went up because either cost of materials, cost of labor, cost of living, all of the things have increased, cost of medical. That's just inflation, right? That's the most common word you're going to hear in insurance is inflation caused your price to go up. Yes, a lot of times that is true, but it's usually not more than 10 or 15%. If your policy went up 20+%, which a lot of you have in the last 3 years, that's not only inflation. There's a lot of other factors that are being played on this that you just may not be aware of. And unfortunately, a lot of agents just don't take the time to understand them. So they'll just tell you what the biggest, easiest answer is the price went up due to inflation. The last piece is your credit score. It's called an insurance score. We've had a couple debates on this. I've got a video I'll link here in just a moment that goes more in depth on that. The actual credit, we'll just say, is the biggest impact. It does matter with claims and clue and all of there's pieces that they put together that create an insurance score, but the biggest impact of the insurance score is your credit. Better credit, more likely to pay, less likely to cancel, less, not necessarily shadiness, but there is kind of a correlation with that, false claims versus a credit score versus having less claims, things like that. Because honestly, good credit usually means you have a better financial background, and then you're less likely going to file a claim. You're going to have a larger deductible, you're going to self-insure and pay the extra $1,000, $2,000 to fix the car, and that means the insurance is holding less of a risk. So that will impact the actual score, will impact the price that you're going to pay on that renewal, so that can fluctuate. Now, not all, and most companies don't rerun your score on the next renewal. It can, and I've seen it, it's probably like a 50% shot. But what happens is usually when they've written you once, they'll let you go a year, 2 years, 3 years without rerunning that unless the location that you're in is seeing a larger impact where they think that, okay, a lot has changed in this area, we just need to rerun everybody. Some companies will run it every time. So every renewal, your credit went up, credit went down, they'll base it off of that score on top of any new tickets, new claims, like the things we just talked about, right? The things. If you want to learn more about that credit/insurance score, I've got a video that goes very in depth on that. If you're looking for just how to combat this with some more discounts, there's a ton that people are missing. I've got a really good discount video here that will help. I'm Mark with Think Insurance. I'll see you in the next one.